trades you're in based on time.
And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Monday, May the 23rd. I'm John Hoagland. Thanks for trusting me with your time. As always, we're seeking accurate context, good risk management, and patience. If you have not read the disclaimer, please do so. There is a lot of risk involved in trading. Everything we talk about on the Market Forecast, Market Recap, and everything is for educational purposes. If you know somebody who is having trouble and is gambling too much trading, try and get them some help. Have them call Gamblers Anonymous, whatever it takes. Yes, there is risk involved in this. And if you are already in the markets, we are hoping that things are going your way already. We've got a very interesting week ahead of us. Starting with economic numbers, nothing very important for us to worry about today. However, Raphael Bostic is speaking at 11 a.m. Central this morning. As far as the rest of the week in economic numbers, tomorrow we have PMI composite flash. It's a preliminary number. New home sales. Wednesday, durable goods orders, petroleum status report, and the FOMC minutes due out at 1 p.m. Central on Wednesday. Thursday, we're going to get a look at the GDP number. This is the preliminary number. It comes out at 7:30 Central Time on Thursday, as well as the usual jobless claims. We also have pending home sales, nat gas numbers on Thursday, and following up on Friday with international trade and goods, personal income and outlays, and the Michigan consumer sentiment. So that's what we're looking at as far as the economic numbers this week. Just thinking about what we're facing this week and what I'm thinking about this morning. Yes, U.S. stocks are set to open higher this morning after 7 straight weeks of losses, with the S&P peaking Friday into bear territory, but finding some support in that area. As far as earnings are concerned, this earnings season seems to be going on forever. We've got a few important ones this week. Starting with today, we have Zoom Advanced Auto Parts. Tuesday, we have Intuit, Best Buy, AutoZone, Ralph Lauren, and Nordstrom still going through a lot of retail earnings. Wednesday, NVIDIA, Dick's Sporting Goods, Williams-Sonoma, some more retailers. Thursday, Alibaba, Costco, and Gap again. A couple more retailers there. And Friday, Canopy Growth. It makes sense that would be on Friday, doesn't it? As far as new uncertainties in the marketplace, apparently we do have a new uncertainty. Biden spoke over the weekend and talked about how the U.S. would defend Taiwan in the event of a Chinese attack. White House has tried to walk back from that statement, but as we can all imagine, China's none too happy about that. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, as well as love. And make sure you subscribe to our YouTube channel so you get notified when we do go live. VIX this morning down about 1%, about 29.12 last I checked. Dollar index down a little bit, still 102.30. In the 10-year yield up slightly at 2.84. I got Lacey over here saying good morning to everyone. She's moosing me to pet her, so I'll give her a few pets, and I'll give her a treat later on. Today is Monday. It is... Would you stop? She keeps moosing my arm, so I can't hit the mouse here, which might be a good thing. It's at certain times in the day. We do have group coaching today. Here's the link so you can register. I always look forward to these and love talking trading with traders. And then tomorrow is Make Hogue Money. So here is the link for Make Hogue Money. First link, group coaching today at 1 p.m. Central. Make Hogue Money tomorrow, right after the market forecast, and I look forward to seeing all of you there. I hope everybody had a nice weekend. I hope you had some fun, you got rested, and you're ready for the week. Good morning, Rick Hoagland, my brother. I love you. It's good to see you always. Shaw, good morning. Kevin, Tachyon, Theo, James Swan. Bad start. Did not do well early, but not stressing. Deep breaths. Good. Yeah, you find yourself, emotional or angry. See if you can't let go of those feelings. It's not going to help in trading. J Trades, good morning. Terry King, Brian, Rusty Golfer, Charles March, Vince, good morning. Frederico, Bill Phillips, Marcelo, good morning to you. I Print Money. Hey, that's a great chat name. Welcome to the market forecast. I don't know that I've seen that before. Glad to have you here. Alfred, good morning. Jerry is awake. Alfred. What is the weekly kickoff high and low? Well, we'll get to those and when we get to the charts. Zachary, good morning. Manuel Caesar, Devant, Trading Research, Tachyon, yet to trade, had a good regular trading hour session Friday. Looking forward to today's regular trading hour, as am I. JD, it's good to see you, sir. Always a pleasure. Sarah Hall, good morning. Prayers and love to you as well. H. Tony Thomas, good to see you. Stephen, H. Tony Thomas reminds me of a guy I was a runner with so many years ago. Vital, Anthony Thomas. Stephen C. Scott saw and he conquered. Keith, good morning. Jason. Dan, good to see you. Europe had a pullback, but we haven't filled that Globex gap. Three Lions, good to see you. Svatoslav, good morning. And Shumba, as always, glad to see everybody here. All right, we're going to step into these charts here, and let me get things set up for us, starting with the S&Ps. Harry, first time here. Welcome. We're glad you're here. We're going to see. We're always trying to think about what kind of context the market is in, looking for areas of good risk management first, and always trying to remain patient. So, again, glad you're here. Ron Merlot, good to see you. First time tuning in as well. Ron, I'm glad to see you. My name is John. It's nice to meet you. And as always, we're going to try and, at the very least, get some accurate context over the markets. And whenever I'm putting on a trade, first thing I think about is where's the risk? Where is the risk? Where is this trade? Where does price have to advertise to prove me wrong? And I try and trade as close to those levels as possible. So hopefully we're going to help. That's the goal. We want to see everybody here succeed. Ray, good morning, wildebeest trader. Joe, good to see you. Rob T, always a pleasure. All right, let's jump into the charts now and see what we see. Mondays are typically slow starters for me. Typically that first hour or two of trade on Mondays, I'm notoriously not that good. So I try and stay patient and stay cool until something else arises. Something comes to me. I find that if I go looking for trades, I'm going to find them, and they're probably not going to be all that good. So as the market turns, let's start with our hero, the S&Ps. Good morning, Glitter Sandwich. Here is the daily. So here we are. Obviously, structure remains to the downside. We've got a ways to go before we can break that market structure. Friday's volume, pretty impressive. We did add open interest. It's going to be kind of difficult to distinguish where that open interest came in, on the short side or the long side. I'm opting for the long side, and we're going to see why on the 30-minute chart shortly. Weekly kickoff high, 40.48 to the upside, 37.20 to the downside. We had a weekly kickoff low last week in the S&Ps of 38.55, and I've left it on the 30-minute chart because it does seem to somehow still be in play. We're going to see that here shortly. We have on the daily chart, every time we've gotten down below that 38.55, 39 area in the last 2 weeks, we've really seen buyers come in and push price higher. We've got very long shadows, and it kind of gives the implication that our downside auction is starting to struggle, and there may be a reversal in play here. I caution to say that because we still have downside structure. We've seen here's another area with a very long shadow indicating the end of the potential end of an auction process. Well, we did head the other direction, but again, on rallies, we continue to see weak volume, weak open interest. So we've got a little bit of work to do before I think we've put in a true bottom here. And, anything can and will happen. Here's the 30-minute chart. A couple of things. Overnight long. Here's that 38.55 weekly kickoff low I've kind of grayed out. It held for the better part of the week. We looked down below it, and then we rejected that area. There's a couple of opposite features to this profile here. We'll get to those in a second. It doesn't look like we're going to be opening with a gap. That I like, especially on a Monday, because I need to get acclimated. I got to get my head in the game, and I think that's part of my problem on Mondays. So that last week's weekly kickoff low, 38.55. It's a low volume node. We can see that the market just kind of went right through there. It's possible that the market may want to come down and check and see if there's any business left to be done down here. Now, on the TPO chart, we don't have a very strong low down here. We do have a degree of excess. We have 3 TPOs indicating the market got too cheap and was rejected. It's not very strong on the 30-minute chart, although it looks much stronger on the daily chart. Just something to keep in mind. It's a nuance, it's a visual, it's something that I will be keeping in mind, particularly if we head back down in that direction. Settlement, 38.99.50. Put that on your charts. Overnight longs, I would say some, to some degree. I mean, we did start down here, and we're holding above that. So there, to some degree, there are possibly some overnight longs here. But again, not seeing anything that's going to push me into this market extremely quickly here on a Monday. Let's take a look at crude oil. We can catch that opening range trade. All right. So OPEC is doing nothing to increase production, even knowing that Russia is kind of out of the market for now in a lot of ways. Not all of them, of course. We're free from rollover. Friday was the expiration. We lost 3,000 in open interest on Friday, but at least we don't have rollover hanging over us for the next 3 weeks. Weekly kickoff high 1640, 11640 up here. Weekly kickoff low 9850. Structure is looking strong to the upside. We are putting in higher lows. We are putting in overall higher highs. I wouldn't call this a mandate to higher prices by any sense. Short time frame balance is really kind of where I'm focusing at. Yesterday's high and $106, $106. 105.90, 105, 96, 96.50 was last week's weekly kickoff low. That's not going to help us much, but every time last week we got down to this level, even though we looked lower, it was always rejected. So I'm kind of looking at this 106 level as part of this area of balance here. Had some pretty stiff rejection here on Thursday. Here's the 30-minute chart. We're in the opening range right now. We have some overnight longs. This pink line here is last week's high, of course. Last week's low here. Big naked point of control down below here. Overnight inventory is longish. We started this day here. Now we're up here. It looks like we've not opened with a gap, but we seem to be rejecting yesterday's range and value. Here's the 1 minute chart that's going to point out the opening range for us. So 110.97 to 111.21. So a 24 tick opening range that so far is the low of the session. It did take its first look out of the opening range to the upside. Not all that impressed. Not all that impressed. As a matter of fact, it looks like we're going to go take out the low of the opening range. Although this does offer a cheap opportunity that we just probably got stopped out on. So opening range, no longer truly a factor. Here's that 30 again. Knowing that we have some overnight longs in this market, it would make sense for, if these overnight longs don't find new buyers in the regular trading hour session, that they're going to get nervous and they're going to sell out of these positions and bring us probably back closer to settlement / point of control from Friday, which is around 110.20. We're on 110.21. So if we're going to be looking for opportunities to buy, I'm going to try and buy it on weakness. We did open with a gap. We closed the gap right away. We are potentially, coming into a value area special situation play. I'm not thinking about doing anything until I see points lower if I'm going to be looking for opportunities to look for longs here. Now on to the Nasdaq. Same but different. Structure still lower. Volume was just okay on Friday. Open interest, we added 900, so that's kind of okay, just not tremendous. We still have kind of those long shadows in the excess. We are already in bear territory in the Nasdaq here. We're trading through 30% off the all-time highs as of the lows from last week, and then through that on Thursday. Is this telling us that the Thursday's rejection down there is a finished downside auction? And again, we saw in the S&Ps that we don't have a very strong low in the shorter time frame. In the longer time frame, these long shadows down here indicate market maybe getting too cheap and buyers finding their way in. Let's look at the 30-minute chart. So very kind of a weak low here again in the Nasdaq. Where did the open interest come in on the S&P and the Nasdaq? Just kind of looking at the highest volume was pretty much on the way back up. So I'm thinking that we did attract some buyers, and the open interest change on Friday involves new business to the upside versus new business to the downside. That rejection just kind of rings of it got too cheap. Buyers came in and started new positions there. So overnight, we're longish again, maybe just a little bit, not tremendously. We're opening in range above value. Stay patient. Settlement is right here, 840.75. We opened in above value. See if there's any hint of acceptance inside value. It's not a true value area special situation play, and I've left last week's weekly kickoff low here in gray, 11,727. Was supportive here. This was Thursday morning. Friday, we broke down below it and came back and closed back above it. That's why I still consider it somewhat impactful for us today. Let's look at gold. So gold's already had some wheels to the upside. Obviously, the opening of the regular trading hour session has a lot of the overnight longs bailing. It's roll week. We're going to go right past July and we're going to start trading August. I believe on Thursday is the scheduled roll day. We'll watch volume and make sure that we're talking about when we would roll over. So this market is starting the week above the weekly kickoff high. Now, what is a weekly kickoff high? A weekly kickoff high is an area where I believe longer, stronger traders will be forced to adjust inventory. Now, that said, we're in rollover. So a lot of the focus of the bigger traders is going to be trying to get a cheap roll. So I think it's going to be hard pressed for us to really go directional or ballistic away from weekly kickoff level today. I fear that it may become more magnetic than repulsive, if that's the right word for that. So as long as we can hold above that weekly kickoff high, I think the opportunity for us to buy weakness against cheap levels of risk might be the thing to do. Again, being rollover, anything, of course, always can happen. Take a look at the 30-minute chart now. So there's that weekly kickoff high. The market opens, has moved higher all morning long until 5 o'clock this morning when possibly some of our new longs here, weaker hands longs, started to get nervous. This is an opportunity for us at this weekly kickoff level here. At the very least, it allows us to limit risk. We've got a gap. We're still holding the gap. We're attempting to close the gap. How good of a job are we doing? Repellent. There you go. Yes. Repellent is much better than repulsive. All right. Thank you for that trading research. That's okay, Marcelo. So this does look like, a potential opportunity. Resistance, acceptance, support, possible support. Interesting spot right there. There's some fish there. Which side of the boat? Unknown. And for the euro, the dollar coming off its recent highs, it's been moving lower since the 12th of May. And that slide just seems to be continuing. Weekly kickoff high is 1.0680. Weekly kickoff low, 1.0434. Here's the daily chart. Obviously, there is downside structure. There is a couple of different levels of areas that I think the market can break this structure, and weekly high is certainly, possibly, one of them. Friday, we lost 5,000 in open interest. I think that was a long liquidation, profit taking just from those that were able to get some contracts bought down here. 30-minute chart. We've got overnight inventory, 100% long. We see the market kind of coming off this test of weekly kickoff high. This is a lot of overnight longs. This is a lot of weaker hands longs here. If we can't hold above weekly kickoff high, there is a probability that this market can come all the way back and check down to close the gap or even points lower. A lot of that, of course, depends on the dollar. So it's a big gap. There are a lot of visual targets above. We've got visual targets below. And I guess we're about 3 weeks from rollover in the currencies as well as the equities. Moving on to the 10-year is also scheduled to roll over on Thursday. So remember that the ability to depend on volume and open interest is diminished during rollover. You've got the front 2 months trading a lot more because of the rollover. You got open interest that is blurry because traders are getting out of one month and into another month. It's just a hot mess when we come into rollovers. So just remember, volume and open interest, the use of them is diminished during rollover. Open interest lost on Friday. Short covering. That takes buying power out of the marketplace. Okay, we've got last week's weekly kickoff level here. Weekly kickoff high was 120.02. Look at our high for the session today so far, including the overnight, just through two or three ticks above that level and then finding rejections. So last week's weekly kickoff level here at 120.02, still somewhat impactful and may end up being repellent. So that level is still largely in play. Take a look at the 30. So last week's range, where are we here? I mean, we are in range, in value, not seeing anything important for me to really try and hurry up and get into anything here. I mean, the market has some overnight shorts. Are those overnight shorts still holding on? We're in range, we're inside value. Stay patient. Better trade locations are likely to come as the day goes on. My initial focus really is going to be the overnight low, which matches Friday's value low, our overnight high, which matches Friday's value area high. Why? Well, because that offers opportunity to limit risk. If we get too far through either of those levels, the market may be sensing a change, and I'm going to want to get out of those positions. So here we are, right in range, right in value, trying to stay patient, stay cool, stay calm, stay happy. You do not have to always be in the market to call yourself a trader. It's one of the things that I tell people all the time. Just because you're a trader doesn't mean you always have to be in the market. Be patient. Look for better trade locations as the day goes on here in the 10-year. And nat gas. Today is switch day. I've already moved our charts to the July contract. Weekly kickoff high 859. Weekly kickoff low 774, and we're right in the middle of it. Anybody start to see a bit of a bull flag forming here? Friday we lost 5,100 in open interest. Again, rollover, very difficult to read volume and open interest. So, well, here's the 30-minute chart. Here's our potential bull flag. We were just looking at this earlier as we were approaching this trend line thinking, this might be an interesting spot. We've already pulled back off of that. We're still in range. We're still holding perhaps some overnight shorts, although I think a lot of that has been reconciled while we've been here in consolidation for the last couple of hours. So try and stay patient. I'm going to be looking for better trade locations as the day goes on. I think my dream location would be if I get the opportunity to trade down to this trend line. Again, it offers me the chance to limit risk. Okay, so we have quite the week ahead of us, don't we always, though? These markets are always challenging and interesting and fascinating and thrilling and aggravating and elating, and they're great and they're terrible. It's a love-hate thing here in futures trading. Looking forward to seeing everybody today at group coaching. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Remember the risk, and think about that before you get in. I'm going to be really patient today. I'm going to make the market come to me. The market's going to say, okay, here's the spot you've been waiting for. So let's jump. Let's do this. But other than that, I'm going to try and stay really patient. If you miss a trade, it's okay. There's always another one coming down the pipe. I'd sooner miss a trade than get in too early, get stopped out, and then watch the trade play without me. Look for good trade locations. Think about the risk, where that risk is, where price has to advertise to prove me wrong. Get in as close to that level as possible to make sure that you are always thinking about managing your risk. All right, I've yammered on long enough. I will see you in the proverbial trading pit in just a few minutes. Get out there and profit today. See you for group coaching at 1 p.m. Central today. And I look forward to being challenged by your questions. Nobody knows everything. I know I certainly don't. And I'm going to tell you if I don't. And lots we can learn together there. So I always look forward to that. Trade well today. And at the very least, maybe I'll see you on the recap at 3 o'clock. Have a great trading day.